Inflation is much too high, and we understand the hardship it is causing.
Fed Chair Jerome Powell announcing a half-point rate hike yesterday. That's the largest increase in more than 20 years. And he's warning more hikes are likely in a bid to fight the worst inflation since the Reagan administration. Larry Kudlow joins us now to help us understand it. What did you think about that initial decision yesterday?
You know, the problem with this whole story is, yeah, he raised the rate, the target rate, by 50 basis points, 0.5%, and that's the most in 20 years. But, Dana, the problem is the inflation rate is the highest in 40 years. So the Fed remains way behind the curve, and we're in trouble, and inflation's going to continue. We had a report out this morning. Labor costs increased over 7% year on year. That's probably the highest in close to 40 years. The Federal Reserve doesn't even acknowledge that. They didn't even mention wage price spirals. They kind of blamed it all on Vladimir Putin and Ukraine and the COVID. They sound a lot like Joe Biden. I'm going to bring them up in front of the Truth Board, you know, the Misinformation Governance Board, because they're not talking straight to the American people who are suffering from falling real wages. So this is not a good story. And the Fed, by the way, yesterday, again, they're not selling bonds. They're waiting to shrink their portfolio. They're not cutting back on the money supply. And you saw the stock market went up over 900 points. It's like all these investors are cheering, yeah, the Fed's really not doing very much of anything. So it's not a good story, and I don't think it's going to end well.
Yeah, Larry, I know a lot of people are looking at their 401ks, and they're not happy. And they all expected them to raise 0.5 point yesterday. And then what they say is that, you know, the market's already built this in. Well, built in what? My logic tells me if you build it in, we should have been flat yesterday, but we weren't. We're up an astounding 1,000 points, 3%. We've already given half of that back. Can you make sense of that?
No, probably not. Look, the market is very erratic day to day, to be honest with you. Nobody can really understand or even predict these short-run swings. Look, my advice is always the same on the stock market. You know, there's over 100 million people in the stock market. Middle-income folks, working folks, have 401ks and IRAs. That is their retirement savings. It may not be as huge as my hero, Elon Musk, but to them, it's very important. And my advice is always buy and hold, okay? You buy and own stocks, you stay with them for the long run, because in the long run, they perform better than any other asset class. And I know we're going to go through some tough times. I mean, look, the Fed keeps talking about a soft landing. They're going to bring inflation back to 2%, right? It's at 8 now, going to 2. But the unemployment rate isn't going to go up. That's just utter nonsense. Again, they should go before the Misinformation Board. We're going to have a difficult time. There's going to be some tough. I mean, I think it'll be hard to escape a recession. I don't think it's this year, but I think it's next year. And the point I'm trying to make is the sooner the Fed acts decisively and takes aggressive action, it's up to them to bring down inflation. Yeah, the better off we're going to be in the long run. You can't have growth and prosperity without that. Well, I don't know. I mean, it's all become so darn political, and there are a lot of woke members of the Federal Reserve Board that care more about climate change and various social issues than they do about price stability. I mean, look, middle-income people are making good money. Their wages are going up by 6-7%. But in real terms, after inflation, they're losing money. And as you say, you know, the stock market, I don't know, the stock market year-to-date on the S&P is down, whatever it's down, 10 or 12%. But if you adjust for inflation, it's actually down close to 20%. And the Fed's not taking responsibility. And on the other side of the coin, we really should freeze government spending, for heaven's sakes. And we should not be raising taxes. as Mr. Schumer and Mr. Biden are suggesting, and we really should unlock the regulations for oil and gas and LNG and pipelines, which would help enormously. I mean, there are things we could do to help this story. There are things we should do to not hurt it anymore. But at the end of the day, it's up to the Fed. And yesterday, believe me, Jay Powell is no Paul Volcker. I actually worked for Paul Volcker at the New York Fed. I hate to even say it, but it was about 50 years ago. Anyway,
he says Volcker's
Powell
his
loves
hero.
to use Volcker's name. Well, Volcker is my hero. If Powell's hero is Volcker, he ought to act like Volcker. Volcker took decisive action in the late 70s and early 80s. We took the pain for a year and a half. Reagan cut taxes. Volcker pulled in the money supply. We ought to try the same thing right now. Stop the spending, make the Trump tax cuts permanent, and the Fed's got to haul in the money supply, and they're going to have to bring their target rate above the inflation rate. And they're so far there. I mean, yesterday, basically, Powell ruled that out, which is one reason why stocks went up so much briefly.
Thank you, Larry. You make us all smarter.
Thank you so much. Good to see you.
Thank you. Appreciate it.
Hi, everyone. I'm Brian Kilmeade. I want you to do me a favor. I want you to click to subscribe to the Fox News YouTube page. This is the only way that I know for sure that you're not going to miss any great commentary, any great news bites, any great interviews coming your way on Fox. You can get it all here on YouTube. So subscribe right now.